Joining us for more is Dan Ives, the global head of technology research at Wedbush. Also here with us for the whole hour is Nancy Tengler, CEO and Chief Investment Officer at Laffer Tengler Investments. Thank you both for being here with us right now. Let's talk about, Dan, the epicenter of all of this. And you've been a notable bull on many of these companies, many of the technologies that are at the center of the meltdown today. Does this worry you?
I mean, in my view, it's a top 3 buying opportunity that I've seen in the last decade for tech. And the reason I'm saying that, I spent the whole weekend talking to tech executives, CIOs, individuals that I know that are going down the sort of AI arms race or going through use cases. In no way of really 25 companies does this change their sort of plans, and a lot of these could be 7, 8, even upper 8-figure type budgets. I just continue to view this as it's a model, and a lot of the details I think still need to be vetted out in terms of 6 million. Do they actually have the H100s, how they actually built it? But this is something we're going to look back on, and I think the street and the market got this way wrong. In no way does it dent our bull thesis. That's what we've been telling clients really since the weekend. These are the times you own these names.
Dan, not all of the companies at the center of the sell-off today are necessarily affected the same way. Mm-hmm. Chip stocks, Nvidia, Kelly mentioned it, $500 billion in market cap lost. That's more than the size of ExxonMobil. That's roughly the size of United Health Group in terms of an entire company lost in market value. Some are affected more than others. Mega cap technology, not as much so across the board as, say, Nvidia per se. When this is a buying opportunity, how much of a buying opportunity and how specific do you have to be?
Well, first on Nvidia, that continues to be, I think, the golden goose in terms of what Jensen and that company are ultimately. There is one chip in the world. There's one GPU that's fueling AI, and it's Nvidia. And when you think about these build-outs, when we talk about the enterprise, the $2 trillion of AI CapEx next 3 years, that doesn't change from DeepSeek. We're talking about 1/1000th of ultimately the build-out that you're going to need for a lot of these enterprise use cases. You look at names like Palantir, you look at the hyperscalers. I could argue with inferencing, if you actually think costs are coming down, it's actually bullish for even some of the software players, names like Salesforce, ServiceNow, Oracle, and others. I just think this is when you look at NVIDIA, I think we sit here 6, 9, 12 months from now and look at this as a moment. It was a golden buying opportunity, and in no way changes our bull thesis for where this is all headed.
Analysts are abuzz as Bank of America Securities, Vivek Arya, and experts like Dan Ives continue to place Nvidia as a top pick leading up to its pivotal fourth quarter earnings call. With an anticipated showcase of Nvidia's robust growth potential in their data center sales and expanding role in artificial intelligence, all eyes are on this tech giant. Welcome back to Investocracy.
I think you've outdone yourself today. We're going to have to get a full shot at some point, including the Japanese, the sneakers.
Yep.
Painted in Japan, I believe.
Yeah,
correct?
Japanese. Yeah, exactly. From an artist in Japan. So we could do the full shot.
We can get to that in a minute. But let's talk about why you continue to see and be the bullish Dan Ives that you have been for quite some time.
Look, and it speaks to our view going into the year. NASDAQ 20,000 is ultimately where I think we head. Tech stocks up another 15% because even though this has been led by Godfather of AI, Jensen, Nvidia, the multiplier for every dollar spent on Nvidia chip, $8 to $10 flowing through the rest of tech. Software, infrastructure, semis, and I think now consumer AI revolution with what's happening in Apple. In my opinion, it is 9 p.m. in the AI party that goes to 4 a.m. And I think this tech market, bull market's going to continue.
How long does it take to get to 4 a.m. though?
I think in our opinion, it's a 2-year tech bull market because I think the next phase, the second, third, fourth derivatives, it's about the use cases playing out. Of course, you see what's happening with Microsoft, the hyperscalers, Google, Amazon, but then next, it's going to be names like Palantir, MongoDB. I think what McDermott's doing at ServiceNow. You look at Oracle. If someone told you Dell was an AI name 6 months ago, they'd say there's no way. Look at it today. And I think it's a 1995 moment, not a 1999 moment. I think numbers go up significantly going into next year, and it speaks to our view where the bears will continue to yell in their caves about valuation with their spreadsheets, but I think this tech market continues to move higher.
You've been saying it's 95 for 2 years, Dan? How long does 1995 last?
So I think, look, and 95 ultimately becomes 96, 97.
Of course, yeah.
But the difference here is that you talk about the CapEx of Meta, 50 billion, what we're seeing Microsoft, 100 billion. As someone that covered tech back in the late 90s, this is not a bubble. This is not a 99, here it comes moment, which is, I think now it's about really a fourth industrial revolution. It's about that multiplier. Now it's software. And I think when you look at consumer, that's why Apple, it's going to be the renaissance of growth that starts as AI-driven super cycle from Apple. And that Apple, Microsoft, Nvidia on the enterprise side, that's where I think it's a get out popcorn moment, in our opinion, for tech stocks still, 15% higher.
And even when you're sometimes negative on names, you seem to still be positive on them. I think of Tesla, which, by the way, you were right to stay positive because the stocks come back. But, on the negative side, you do right. The losers are going to be, in this revolution, will be the tech players that get squeezed out of sales cycles, technology-driven platforms, and future growth opportunities because they don't have the tools, tech, or software engineers to compete. So what does that mean, and who is that likely to be?
Yes, you've seen some of the disasters, UiPath, and some of these smaller players that have been squeezed out of sales cycles, what's happening across software. So I think what's going to happen is across software, across semis, it's not just saying AI 40 times in a conference call. Now, to Mike's point, now the next 6-9 months, it's about execution. I think strong gets stronger. I think a lot of the smaller players get squeezed out. Ultimately, I think that will be massive consolidation in terms of that phase for software. But I think any sort of hiccup that these companies, you'll see these stocks down 20, 30, 40%, which in our opinion is you focus on the themes, you focus on the winners, the Microsofts, the Apples, and then even go like mid-cap. I think in cybersecurity, and I talk about value, I think software and cybersecurity is where I see just massive value. Names like CrowdStrike, Zscaler, Palo Alto continue to be that as a table pounder, even though many, including New York City cab driver, were bearish from Palo Alto 6 months ago. It speaks to what we're seeing with this cloud AI revolution.
All right, you're going to let us know when 99, 2000 is coming, though, right?
But right now,
no, you won't be able to do that. You're too bullish.
But the point is, it's 9 p.m. It is not midnight, and I think this thing goes to 4 a.m.
And this is a man who knows how to party. I mean, look at him.
Well, you know the old saying,
look at him.
The clocks have no hands. That was
As the trading day dawns, Vivek Arya's enthusiastic endorsement of Nvidia has caught the attention of investors everywhere. With a bold price target of $190 and his assertion of an upcoming modest beat in the earnings call, the buzz is louder than a Wall Street trading floor during earnings season. Arya's calculated optimism, backed by Nvidia's ongoing Blackwell product transition and geopolitical challenges in China, offers a more nuanced narrative. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
We're long-time investors. We already have pretty decent-sized positions in both Broadcom, which we've owned actually for 10 years, and also Nvidia. So the news out yesterday obviously started a lot of people, but it doesn't fundamentally change our view. In the long term, AI demands and applications are going to continue to drive the demand for compute power. And we can get into the details of why, because it sounds a little counterintuitive given what we heard yesterday.
All right, why?
Yeah, so it's pretty obvious that these guys have come up with a more efficient model, and because it's open source, people are right now checking the veracity of the efficiency of the training part of it, but also the inference part. Yeah. And if they've come up with something that really is more efficient, terrific. Imagine all the new applications that will be able to spring out of something like that. But the chip guys, NVIDIA in particular, really took it on the nose yesterday, including Broadcom. And the question there becomes, if you're Amazon, if you're Microsoft, and all of a sudden you have a more efficient model, are you going to, take your foot off the accelerator and say, okay, I guess I'm done. I don't need to spend all that money. In the meantime, Microsoft across the street is now taking advantage of it, buying all those GPUs and delivering something even better. So one has to look beyond the obvious. to the competitive forces between the AI providers, OpenAI, Amazon, Microsoft, to really figure out how much they're going to spend. And there's great analogies from the past on this.
Nvidia's share in the AI-driven market remains astounding, and by 2025, their data center sales are expected to exhibit over 60% growth, according to Arya's projections. And yet, despite glimmers of competitive pressure from ASIC vendors like Broadcom and Marvell Technologies, Nvidia's grip on the market remains firm, currently commanding over 80% of the share. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
If you think that it's game on, then a decline of 17% must have been a big buying opportunity. Did you put more money to work in either shares of Nvidia or Broadcom yesterday?
No, we didn't. One has to put that in context, though, right? I mean, we got a lot of questions from clients about this. But when you look at the year-over-year performance, I mean, Nvidia was still up 88%, something like that. Broadcom up over 60%. And so, there's a little bit of a pullback, a little being a lot when it's a company as big. Yeah, when it's a company
the
as big
biggest
as
market
Nvidia.
cap evaporation in history in one day.
Exactly. I mean, when you're that big, disruptions in risk in the future, right? An increase in risk, which clearly this is, will cause multiples to contract. Reductions in potential growth forecasts will cause the stock to fall. But one has to think back to history. I mean, imagine you're in the 1980s, 1990s. Intel has come out with a better CPU. Per bit, computation costs went down for decades. Did people buy fewer Intel chips because they said, oh, I got all the computing power I need? No, they kept buying more. So even as the cost per compute went down, the demand continued to rise. And we'll see that with
But this
new
gets to the question of valuation for this stock. Did you think it was overvalued 2 days ago? Did you think this was a situation, or did the situation change to say, okay, maybe there's not going to be such a stranglehold, and Nvidia being the only company that can actually deliver on that or not? Because if you didn't think that had changed somewhat, I would think a 17% off would be a great buying opportunity, unless you thought it was overvalued to begin with.
No, we didn't think it was overvalued. We did recognize, though, that there's an awful lot of growth embedded. And what yesterday taught us is that expectations can change suddenly when a new piece of innovation comes out, when new information comes out. But if you're a long-term investor, you don't move on that necessarily. And we already had a full-size position. We didn't want to add to it. And that also speaks to the importance of building, client portfolios that are diversified. And so that's what we try to do here at ACM. But, one of the things I think people should recognize now is that we're going to see a lot more information come out about this. And more importantly, we're going to see how the companies using these and developing these AI models react. Remember, NVIDIA still is the only game in town, right? We're going to see some new chips from AMD. But if you want the best, most powerful compute power, you still have to go to NVIDIA. Now you have a more efficient model to run on that more impressive compute power. It doesn't mean you're going to back away and say, well, I guess I won't use it all, or I guess I won't take the most advantage of it.
Nvidia's current market trajectory, buoyed by a robust demand for AI-driven solutions and a projected $500 billion total addressable market by 2028, offers a compelling case for bullish optimism. But what about you, dear viewer? What do you think of Nvidia's trajectory? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.